Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake, coming to you from the George Washington University School of Business, Duquesne Hall, Duquesne Family Studio, right here, in the heart of Foggy Bottom. This is a GW Investment Institute podcast, educational and entertainment purposes only, not investment advice, right at the top of the show there. So today's episode, we're starting a new format. We've had one episode already. We're anxious to hear feedback if you like this format. We're mixing up a little bit. We're still using the BMPB framework, business management, price, valuation, and balance sheet. But the catalyst for the companies we're talking about, companies in our portfolio for the episode today, plus companies that just announced earnings. So we're going to go over the BMPB, but also through the lens of earnings being announced. And so what are the three companies, drumroll today, that we're going to cover that are in our portfolios? Alphabet, Microsoft, and Berkshire Hathaway. Obviously, one of these things is not like the other, does not pass the Sesame Street test. That's probably Berkshire Hathaway, Alphabet, and Microsoft, big tech companies. Berkshire Hathaway, mega cap company, but not really in the center of the tech world. It owns a big slug of Apple. However, it would be considered, an old school company. We'll talk about that. And its current CEO will be stepping down. Warren Buffett, very famous Warren Buffett, and certainly underpins a lot of what we do. And we learned a lot from Buffett for the GW Investment Institute and have taken a lot of his ideas for the classes that we teach. We obviously modify those, and for the things that we want to do, we obviously own a bunch of different companies like Alphabet, Microsoft, and NVIDIA that Buffett and company at Berkshire Hathaway don't owe. Ted and Todd and Buffett and their equity portfolios, and they buy businesses that we wouldn't necessarily buy. Party City, an example of that. But they're a big insurance company, and they have been very good to us, and Buffett has been very good to his investors. So nothing but love for Buffett from us. Taking a sip, if you're listening to the episode on the podcast, Apple, Amazon, Spotify, and if you're watching on YouTube, you can see this is a GW Business School mug. Buy the merch, subscribe to the channel. Okay, so we're going to go through these companies: business management, price, valuation, and balance sheet. Alphabet, also known as Google, as we all know and love it, but its official name, corporate-wise, is Alphabet. So business side, let's start going through the earnings. What has been happening on, just recently announced the earnings here, reported September 30. We're here for the quarter ended September 30, reported on October 29th. All right, let's get into it. Q3 here, $102 billion on the revenue side. That is up 16% year over year. That is a beat. Google advertising here, $74 billion. That's up over 12%. That's a beat. Excuse me. Search and other, 15%. And the YouTube here, which I think is important to watch, up big too. And so Google Cloud, this is something that I think everybody should be paying attention to. So this is what, we just talked about what AWS is doing and how, it reported after Google and Microsoft Azure, and we're going to be talking about Microsoft in this episode. But if you look at the numbers here, up 34%, $15 billion. So look, monster quarter here. Operating income up 36%, $31 billion. Net income, $34 billion, up 33%. So free cash flow, $24 billion, right? Monster quarter. Absolutely here at the center of what's happening in AI, or one of the companies, again, maybe the company at the center right now that we talk about often is NVIDIA, but certainly the Mag 7, I say in general, probably you can really put in the discussion of what's happening on AI if you want to add Broadcom in there as well to round it out as the Elite 8. You can do that as well, and many people have been doing that. So business side, obviously booming here, right? Gemini is the large language model that Google has. They've been incorporating that into products. I would say, this is my personal hot take, what's happening on the model side. I would have number one, and there's all different benchmarks. This is the Market News with Rodney Lake benchmark for large language models. By the way, this is based on my personal experience, so there is no, data set that I'm going to produce here to show you this, just based on my usage, and mostly my usage involves what investment analysis can I do with these models? And that's generally what it does for me. And so I'm super focused in on that. So for me, number one is Grok. Number two, ChatGPT. Number three, Claude by Anthropic. Number 4, deep number 4 for that is Gemini. Now, I do use it for some coding as well. I think they're all pretty good for that. I do think Grok is quite good. ChatGPT is good. Anthropic or Claude by Anthropic, I think, is also good there. And I think Gemini definitely bumps up, but still in 4th place. But certainly more competitive there. I think on the analysis side, it refuses to do some work there. But the other models I think are well ahead. And again, that's my benchmarking for investment analysis using these large language models. So again, that's not based on any extraordinary data set. It's a data set of one and how I use it, and you would call that anecdotal. But when I benchmark the models, that's where I have them. And I would say that there's a top 3 and a distant 4 for that. And then I would say they're all 4 together, depending if you're using it for coding as an example. I would say it's there. I'm not an advanced coder to be super clear, but I certainly do it. I run a quant class and certainly do things for that. But I think it's a great tool. It's great to use. And I think it's important to consider and think about your usage case, and you can make yourself a lot more productive. So back to Alphabet here, back to Google, and then we'll move on to Microsoft and Berkshire Hathaway. Again, monster quarter. So that on the business side. So let's dive in. The numbers here, right? Market cap. Also to talk about where it is right now. $3.3 trillion market cap. Year-to-date number up 47% for Google. So it's been good after the overhang of the legal issue. Obviously worked out much better than people expected. And so, obviously you had a pop after that, and now you have really earnings going very solidly for Alphabet / Google. We'll just call it Google for ease of use here. So all good metrics there on the business side. Now, if you look at Sundar Pichai, the CEO, you got to give him credit where credit is due, has been navigating the company well. I think they're investing in the right places at the moment. I think obviously incorporating Gemini, even, excuse me, even if I put it 4th, the fact that they can incorporate into that the business suite of products, into the personal suite of products that people use, and they use email, they use Docs, they use Sheets. That's very good. So for research and analysis, and certain things that I do in Google, I do think it's quite good. And if you have an integrated approach, obviously people are, for enterprise solutions, and people are pouring money into enterprise solutions. Think Microsoft and think Google here, like they're chugging coffee. And so good for them. And certainly if you have an enterprise solution, that's different than the enterprise solution that ChatGPT or Grok would have at the moment. Now that can change over time. But if you look at enterprise solution side, you would have to give an advantage currently to Alphabet and Microsoft, who have all these enterprise clients already and have relationships, and that matters on the security side as well. So the integration there, I think, is important. So the business side being run by the management, doing well. So Sundar Pichai, very good allocation of capital. It seems to be very good at the moment, and they're investing heavily. Big CapEx budgets, and so we'll talk a little bit about that. So if you look at how much money they're pouring into CapEx, $90 billion is the expected for this year. A lot of that's going in to AI. And again, they have their own models. So very good neural net chips as well. So Google in good shape on that. So let's move on to the valuation here. So if you look at what's happening on the valuation side for Alphabet / Google, 25 times, this is not expensive. This is not an expensive company. This is basically a market multiple. So, not advocating a buy for any of these companies. We do own these companies in our portfolio, not investment advice, educational, entertainment purposes only. But 25 times is not expensive for a company that sits at the center with others around this AI play. And so, not expensive at all here on the valuation, especially comp to other companies. And for a company that's this big, growing, and has the potential to grow into some of these gigantic markets. And so, pretty good. And now look at the balance sheet here. This is also not going to surprise anybody. Sleeping like a baby at night. Going to take a sip out of my GW School of Business mug. $98 billion in cash through the trailing 12 months, quarter, 37 in debt. So big net cash position, generating tons of cash. Free cash flow, $73 billion. That's for that quarter. That's after investing $77 billion. And so plowing money back into the business. So for the full year, 2025, 12/31 calendar year, thinking $90 billion on CapEx, but still generating $62 billion in free cash flow. So not necessarily worried at all about sleeping like a baby at night on the balance sheet for Google. Now, moving on to Microsoft. So Microsoft also announced earnings, and also, another AI company that's in our portfolio and part of the Mag 7. Excuse me. Talk about revenue. This is their Q1 fiscal year 26. $77 billion, up 18%. Operating income, $38 billion, up 24%. Net income, $27 billion, up 12%. So look, these numbers are great. And, if you think about what's happening, we focus on this for AWS, we focus on Google Cloud, also Intelligent Cloud, Microsoft Azure, talking about $30 billion in revenue, up 28%. These are big numbers. And Azure and other cloud services up 40, depending on how you're counting all these things, percent. So look, Microsoft is absolutely at the table here. They are plowing money, $34 billion in CapEx, and we'll go through their CapEx numbers. And so absolutely not constrained here. They have a big investment in OpenAI. They did some reshuffling, and now Microsoft owns approximately 27% of OpenAI for-profit arm with total committed capital, by the way, of $13 billion. I think that's worth noting, right? Look at, they own 27% of a $500 billion, what's expected valuation or valuation for OpenAI. Obviously, on paper, so far they have done well with that. It's been good allocation of capital from management team, and I think again, tip of the cap for the management team. We'll get to that in a second here. But look, overall on the business side, going through the numbers for this quarter has been fantastic, and I do think that the management team has been killing it there, and so running the business well. So let's get back and now let's talk about the management team here for Microsoft. Again, we went through the operational numbers, and so they're running the business super well. Nadella here, who's the CEO, doing a fantastic job and really steering this company, and really was one who spearheaded Microsoft Azure in the cloud business and transforming the company, and has continued to transform that business. And so Nadella gets, I think, a really great score on the management side. And so really good things to say about that. Capital allocation side, if you think about the CapEx, which we talked about, very high for Microsoft. And so what's the expected full year number? $76 billion for their fiscal year, which is June 30. $94 billion. And then it'll produce free cash flow of $76 billion through 2025. And so look, allocation capital, very strong, going after the AI, playing to win in the AI game, which I think is the way to do it. So tip of the cap to Nadella and company on the management side. And now we'll quickly move to the balance sheet, and then we're going to move on to Berkshire here. We'll do a little bit of wrap up here on Microsoft. So going to the balance sheet, also the same here, $100 billion in cash, and total debt $120 here. So not a net cash situation for Microsoft currently through 9/30/2025, but generating plenty of free cash flow, $78 billion through that time period. So not really worried about Microsoft's balance sheet, really sleeping like a baby at night. And so, not worried. And if you look at the interest coverage ratio, which again is earnings before interest and tax, EBIT over total interest expense, that is nearly 54 times. So sleeping like a baby. Microsoft, okay. So business management, price valuation, and balance sheet for Microsoft. You go through the business, the cloud business obviously growing, really important. They have this big investment in OpenAI, which is, the early leader in the large language models, finishes second in my benchmark as we covered there, but big investment there and cruising ahead, dominating along with Google and AWS and providing those cloud businesses, and Oracle coming on strong as well. But really at the center, along with the Mag 7 and the AI play, front and center, again, with its own investment in OpenAI, 27% of the reorganized for-profit arm of OpenAI. So we'll have to see how all that plays out. All right. So overall, very good. Hitting on all those metrics very solidly, and optimistic about the future of Microsoft. We didn't cover the valuation. Let's make sure I get back and cover where they are on the valuation side. BNPB. We skipped over the valuation. I moved on to the balance sheet very quickly. What's happening on the valuation? Well, it's a little more expensive than Alphabet at 32 times, but certainly not super expensive, especially when you consider this is a Mag 7. It's at the the table here, and it even has a dividend yield of 0.71%. So getting paid a little bit of money, not a ton of money, but getting paid a little bit with not a crazy valuation. They announced great earnings and actually sold off a little bit. But the year-to-date number up strongly, 21% overall with the market cap, $3.8 trillion. So one of the largest companies in the world. All right, so overall, business, solid. Management, very solid. Price valuation, maybe a little bit expensive, certainly compared to an S&P 500 company, but not compared to a Mag 7 company, not compared to a company that's sitting with lots of great assets and future growth prospects here with AI. Not super expensive, not advocating as buy, just remember here, but we do own this company, so important for us to watch. And the balance sheet clean, 54 times interest coverage ratio, EBIT over interest, no problem, sleeping like a baby. All right, the last company we're going to cover in this episode is Berkshire Hathaway. Now, as I mentioned, this is the Sesame Street test. One of these things is not like the other. That would be Berkshire Hathaway. We talked about Alphabet, we talked about Microsoft. We're talking about Berkshire Hathaway, which I would call the contra-AI trade. So if this is in your portfolio, maybe you keep it there and you think about this as your hedge against the AI world. Now, you don't have to do that, but you can certainly think about it in that way. That's how I think about it for our portfolios. I call this the contra-AI trade, and this is, some old school businesses, railroads, insurance, and we'll talk about that in a second. And some of that, I think is at risk. So if you look at the numbers here, operating earnings, $13.5 billion approximately. Change is quarter over quarter, 34% here. Revenue up $94 billion, up modestly there, 2%. And I think the piece here that people have been watching very closely is what is the cash pile. So the net cash pile actually grew. So they're net sellers of stock. And so $380 billion approximately, 381.7. And that's up. And so $100 billion year to date. And so they haven't been buying back any stock. They have been net sellers of stock. And so the cash pile continues to grow. And so they net sold $6.1 billion in equities. That's the 12th straight quarter, of being a net seller. So what does Buffett know that we don't know? Well, we don't know. But he's obviously concerned, and Ted and Todd, who run the equity portfolio, they seem concerned. Maybe it's about the valuation, maybe about the AI bubble. They're not involved in a lot of these companies. They do own shares in Apple, which is one of their larger positions. But overall, if you look at insurance, it's going well. Railroads going well. Manufacturing and services up 7.9%, and the energy piece here, not bad. But you certainly would say, okay, what's the real tell here? It's the cash pile. So the operating businesses seem to be doing okay. And one of the ones that I'll call out, and we'll come back to the cash pile while we're at business management, price valuation, and balance sheet. On the business side here, one of the concerns that I would have, or I do have since we're shareholders in this company, is what's happening with Geico in particular. If full self-driving continues to improve. Right now, depending on what stats you can find some stats online, that supervised full self-driving by Tesla is about 10 times better now than unsupervised driving by people. And I don't. That's from Tesla. I don't have the Waymo data, but it's currently 10 times better. Currently, supervised full self-driving is 10 times better. That's going to improve. When it gets to 100 times better, a 10x from here, what's going to happen to car insurance rates? It's probably going to drop. And so the expectation there is, I think that is a business that got to closely watch that insurance business on the driving side. Now, Berkshire Re and some of the other big things can continue to do well, and I think there'll still be, business to be had there. The railroads, could actually improve, and if really you're running the railroads even more efficiently with AI, maybe that's going to be a very good thing. And so Burlington Northern pre-tax earnings grew 11%. So keep an eye on that. Moving goods all around with less and less people, and so maybe they become a big beneficiary of the railroads. Now, what you could say is that with autonomous driving and the semi-trucks, it could put a dent in that, but it could actually drive volume. So we'll have to wait and see. I think it's worth paying attention to there. And then, of course, on the energy business, if there's a lot more energy demand and they're producing that and they're producing it profitably, regulated part of the business, that could be a very good for thing. Back to the cash cow. So that's the business side. So the business side, relatively well overall. The cash pile seems to be a big concern. So overall business, I would say, again, contra-AI trade, insurance, not really, could be impacted by AI, particularly on the car side. Railroads may, could go either way. Manufacturing, Obviously, it can go either way. Energy side, maybe that's a tailwind for them. And so, again, maybe not full contra-AI trade here, but certainly the things that they're doing and how they're deploying their capital could be the contra-AI trade. So now, moving on to management. And so, Buffett, famous, obviously, well-known. We love him. You love him, possibly. Stepping down at the end of the year, Greg Abel taking over at GJ and will continue to run the insurance part of the business. Something for us to watch is, will this change dramatically what they're doing? I think they should have been very aggressive on the railroad side, making a nationwide network here. But that's just me. Maybe next year that will happen, and Greg Abel is fully in control here while we have sort of this transition period, Buffett leaving at the end of the year officially as CEO. So management still going to give a tip of the cap, running okay. Obviously, could do better. On the valuation side, this is not, they have not been buying back shares. And so if you look at, okay, well, what's Berkshire Hathaway been doing? Well, they have not been buying back their shares. So they don't consider themselves to be dramatically undervalued by any chance. And Buffett talks about, okay, when we get down to 1.2 times book, then they'll be buying back shares. That has not been the case. And so if you think about, where they are now, they're well above that on the price to book side. So, what's going to happen? Well, if they're not buying back shares, then I think it's going to be, fairly valued. If you want to say that right now, we could say that it's fairly valued at the moment. So not not cheap. Certainly not cheap enough for Buffett and company to be buying back shares. But certainly not super expensive, and I wouldn't say in any case overvalued. So the price valuation and the balance sheet, that's where we get back to the cash pile, $380 billion approximately on the balance sheet. What does Buffett know that we don't know? Again, this is where it gets back to the contra-AI trade. Maybe the balance sheet not only helps you sleep at night, but if there is some burst in the bubble, or there is some period where people get very stretched, you would hope that Greg Abel, as CEO, gets to deploy some of that capital and buy some great businesses on the cheap, or expands the railroad, or whatever they want to do. But they do have the cash pile to do it. That could, again, be your hedge on the AI trade if you want to remain fully invested. So business management, price valuation, and balance sheet. Overall, contra-AI trade is what I'm calling it right now. And again, please let us know about the new format. Today, we talked about companies that just announced earnings that we own: Alphabet, Microsoft, and Google. And so we'd love to hear from you. Send us your feedback. What are you thinking? Do you like this new format? Buy merch, subscribe to the show. That's it for this episode of Market News with Rodney Lake. We'll see you back on the next one. Thank you. Disclaimer: the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.